Welcome everyone, Tom Stoff here, CEO of redoakdevelopmentgroup. Wanted to give you a quick thought that's been on top of my head for some time. Over the past probably 18 months, I have a lot of friends that are in development, in existing acquisition of apartment buildings, multifamily units, what have you. And unfortunately, they're coming to a point where they can't get financing. Their cash flow models are upside down. And then just recently, the black swan, which is their insurance premiums have skyrocketed 30, 40, 50%, completely tanking their cash flow models. Pre the insurance increase, they were essentially break even, maybe slightly cash flowing, which they were putting into reserves to be able to withstand what is a tightening capital markets for that asset class. So I say all that, and I don't want to be the doomsayer and sort of paint a black cloud across the asset class, but if you've been watching any of my stuff or follow me at all on LinkedIn, you know that I've been calling the commercial crash since 2021, mainly because anytime the vacancy goes above 8%, I know those cash flow models are upside down. That was my thesis, and now you look at San Francisco at 35, 40% vacancy, and there's a major problem there. But I was calling the multifamily issue back in early 2022, not because of insurance. I did not call that for multifamily, but because of the tightening markets. It's not a hard equation to figure out. I also was calling the increase in insurance premiums, and I don't know if it's correlated to the same reason, but anytime the cost of things go up, i.e. inflation, people are going to increase prices and penalize the consumers that have it, right? So, my partner David Teo and I have spent a lot of time figuring out, pivot strategies, how best does Red Oak grow and sort of, expand our book, not just on our windfalls, but on cash flow and, most importantly, I think now is tax sheltering. And so we spent a lot of time, we've ruled out multifamily. That's my point in that. We have obviously been against commercial office, although I am personally looking to buy one from my own company, probably Q1 this year, given the decreased valuations. And of course we do land, right? And so we're looking across asset classes and we're trying to figure out where the heck can I get alpha or returns on my capital. And if we're not doing land, which is great for big windfalls, but we still can't find cash flow. We still can't find tax write-offs. And tax write-offs via bonus depreciation, right? So an asset that we can depreciate quickly. And then I came across this guy, Cody Payne, from Colliers, senior vice president. I saw him on a podcast, and I was like, man, this guy he's sharp. He happens to be located in Dallas-Fort Worth, which, if you know where I'm based, that's Austin, Texas. So my partner David Teo and I drove up to Dallas one day. We sat down with Cody and his team, and we said, look, we need an asset class that has cash flow, that has tax appreciation, or tax write-offs via depreciation, and that allows us to exit a portfolio down the road, right? And we got talking to Cody. That was about 2 months ago, and we announced our partnership in a pretty big initiative, which is to build a $500 million portfolio of 40 sites, flex warehouse. So think of it as 2,000 square foot warehouses. Okay, so for the contractor, the painter, the drywall guy or gal, the windows person, they want a storage center, they want a little bit of office space in the front, but they have nowhere to go. It's been an underserved market for some time, mainly because it's too small for Wall Street, right? You're looking at $8 to $14 million build outs all in, including land. So Wall Street likes to write checks of 20 million and above. So it's too small individually, and it's too big for the mom and pops, right? I mean, $10 million for a family is a lot of money. You're gonna need $1 to $2 million of equity. Most people don't have that laying around. So it's been a relatively underserved market. And if you look at some of the driving dynamics that can show you, how do you know this is even a strong market? Primarily population growth, job growth, infrastructure spending, and home permits. Well, where is that booming right now? Texas. So we happen to be here. We met Cody in Dallas-Fort Worth. We formed a partnership with Colliers, and we're going to be raising $120 million for this fund over 6 years to develop these sites, Already have two in process, one in Temple, great market there, and then one in Fort Worth. And yeah, super bullish on the asset class. Again, it offers cash flow roughly in the 8 to 12% once stabilized. And nothing crazy, but not bad. When you compare, S&P is just kind of tanking if you're not in the big five tech companies. It offers tax write-offs via bonus depreciation, just like multifamily, which is fantastic. And if you package it up in a portfolio, we can take it and sell it to Wall Street, right? So our grand thesis is to build out this portfolio over 7 years, raise about $120 million to build a $500 million portfolio, and then go out and hunt for an institutional buyer, likely selling in the 7 to 8% cap rate, which is really where it is already. So if rates come down, then we should see cap rates also contract. So we'll see. But we have 7 years of this with the planned exit in 2031. So we'll see what happens.